Hey guys, Sean Terry here, flip2freedom.com. Hope you're doing well. All right, so I want to talk about foreclosures. What is going on with the foreclosures? Are we going to get flooded with foreclosures? And what's happening in the real estate market right now? So we do deals nationally all across the country, and I can tell you I have never in my 20 years seen a faster pace of properties just dropping all across the country. It's like the fastest pace I've ever seen. And now we start looking at why. Why is this happening? Well, I found this article and it talked about, are we in a housing bubble, right? Are we in a housing bubble? So this article right here, it shares and it says basically 3 elements that we're in a housing bubble. So let's look at these 3 elements to see what they are, right? Well, first off, textbook definition of a housing bubble requires 3 things. First, you must see an exuberant demand boost by speculation, a rush into the housing market. So have we seen that? Heck yeah, absolutely. We've seen that. Inventory low, pandemic going crazy, prices going up, people putting multiple offers on houses, home builders doing lotteries. Second, spike in home prices would travel well above what income can support and reach overvaluation levels. So have we done that? Well, we look at, over here, and this is the home ownership affordability monitor, right? And you look at over here, back in 2007, we had that crash over here, 2007, 2008. I was actually wholesaling houses during the 2000. I actually started back in 2003. So I went through the boom of 2005, went through the correction of 2006 and 7, and then went through the crash in 2008 and 9. The home affordability during this time was incredibly low. Look where we are now. Look at this. It's even lower than this. We're at 71.4 in July of 2006. Look where we are today. We're at 71.5 on the affordability index. So are we in a housing bubble? Has it incomes support the overvaluation? So the affordability index is way out of whack. Third, the housing bubble pops and home prices fall. So look at, now we see, sellers dropping prices. Home sales are getting canceled at the highest rate. People are actually dropping. You look at more than 40% of home sellers dropping their prices, especially in Salt Lake City, Boise, Sacramento, and other pandemic hotspots. So we look at that right there and we go, listen, there is a bubble and it is now currently popping. And then we look at inventory levels, because inventory determines pricing. And if we have those inventory levels continue to spike, it's going to put pressure on the pricing. So what are our inventory levels? Let's look at it right now. We go back here and we see that our inventory levels, this is 2008. This gray is recession. We go back here, look at, we have 12.2 months supply in January of 2009. We go back over here, we had look at supply over here, 3.3 months supply, all the way down to the lowest levels here. Now we go up right here. We're at April is 8.3 months supply of inventory, and currently in May we have 7.7 months supply. So it's going to go up and down and up and down and up and down. But the bottom line is we have a trend reversal, and now inventory is going up. So what could impact more inventory in the marketplace? Well, foreclosures. So what do the foreclosures look like? Interestingly, back in 2021, when the whole pandemic came out, I thought there was going to be a massive wave of foreclosures, but then the government actually stepped in and they initiated this forbearance program that basically let people not pay their mortgage for the tune of 2 years, all of 2020, all of 2021, and they lifted the moratorium in March of 2022. Now, there are certain states that still have this moratorium, certain cities that have this moratorium in place, parts of California. So we look at right now and we go, okay, what is up with this, these foreclosures? Are we going to have a wave of foreclosures? Now, what happens is when they lifted the moratorium this March 2022, it takes about 90, 60 to 90, even 120 days for that foreclosure to actually come to a head. Because what they do is they have to initiate a public notice and say, hey, your house is going to foreclosure. This is what they do in Phoenix here. And then you have 90 days to cure, make all those back payments. Now, typically, when someone gets that notice, they're about, 90, or they're usually about 90 days behind, 30, 60, 90 days behind. Then the foreclosure notice comes out. And then by the time it actually has the auction date where it's going to go to sale, they're about 6 months behind on a payment, right? So if their payments are $1,000 a month, they're going to have to come up with $6,000 to cure that mortgage to stop the foreclosure. Now, obviously, some states are different. Texas, I think it's 2 months. But here's the thing. They're getting these foreclosure notices now, and they have to pay all of 2021, all of 2020, the rest of 2020, all of 2021, and the beginning of 2022. So they're getting these huge reinstatement amounts to bring their mortgage current. It's going to be astronomical. Could be in the $20,000, $25,000, $30,000 range. So if someone can't come up with that, then the house will go to auction. So what they do is put a public notice, like a trustee sale or foreclosure. They tell you when the auction is going to happen, what time the auction is going to happen, and where it's going to happen. So now we look at what's the potential universe of potential foreclosures. Now, not all of them are going to go to foreclosure, but there is roughly 8 million people, 8 million that opted into this forbearance program. Now, some of them come out of that forbearance program because they've got current. Some people are still in it, and then some other people have been added to it. So when we look at that, 8 million people's astronomical. So we look back at 2006, 7, and 8, and we look at how many foreclosures. If you go back and you remember that era, I do. I mean, you could drive down a street and you'd see foreclosure signs all over the place. What was that number that created those amount of foreclosures? Well, let's look at it. Well, we go here, and this is from Adam Data. This is from July 2022. And we go back 2008, there is 1.3 million foreclosures. 2009, 1.5. 2010, 1.6 million. And then it dropped dramatically in 11, 12, 13, and went all the way down to 2020, 165. 2021 had the least amount, 65,000 nationwide. And now look at, we've made a reverse, right? 2022, this is the first half. And look at this. This is the first 6 months of 2022. Now, this is all of 2021. This is all of 2020, all of 2019, and this is just the first 6 months of 2022. So now we look at it, and let's just take the number 165, right? And now we got 330. So when 2022 ends, we could have as much as close to 330 upwards to 2018 foreclosure levels. Now, that's not even close to this 1.6 million, right? But that, in my opinion, could be potentially just the beginning. If we have these 8 million, of course, it's not going to be 8 million because people are going to get out of the situation, but is the number 3? Is it 5? I've heard numbers like between 1.7 and 2 million potential foreclosures. So let's put it together. So we have foreclosures that's going to enter the market now because they ended it in March, right? And then it takes about 90 to 120 days. We've got March, April, May, June, July. Now they start to come out and we start to see an uptick like we've seen. And now those continue to increase at a pace. And now let's say this year we have 330,000 foreclosure. What's going to happen in 2023? Now, interest rates are rising. The Federal Reserve is raising the rates this Wednesday. We don't know if it's 75 basis points or 100 basis points. But that's going to impact overall mortgage rates, which are going to increase. And they're doing something what is called quantitative easing. Now, if you don't know what, or actually quantitative tightening, my fault. Quantitative easing is when they're pumping money into the market, right? And they're stimulus and they're buying mortgage-backed securities, they're buying bonds, they're buying US debt. So they're pumping money and creating liquidity into the market, and they go on a rate lowering campaign. Now, if we look here, you'll see that this is the Federal Reserve in 2015. They had a 4.2 trillion balance sheet. Now you see here, it's pretty much, it was starting to decline. And then all of a sudden right here, what happened is that boom, they doubled their balance sheet from 4 trillion to $8 trillion. That is more money than they have ever pumped in the shortest period of time ever, right? So they doubled their balance sheet. So what does that mean? Well, when the Federal Reserve pumps money into the market, equities grow, right? So the stock market goes up, commodity prices go up, and real estate goes up. You pump money into the market, people buy equities, commodities, right? People buy all sorts of different things, and they buy housing. So just remember this, when the Federal Reserve is quantitative easing, they're doing a rate lowering campaign and they're pumping money into the market, then equities rise. When they are doing a quantitative tightening, meaning they're doing a rate hiking campaign like they're doing now, and they're doing a pulling money out of the market, quantitative tightening like they're doing now, equities collapse. Commodity prices have come off. You see, home prices now coming off their peaks, and now you see interest rates rising. So if we go back to the computer here, we'll see that their plan is to reduce their balance sheet out till 2020. Look at 2024. They're going to be pulling $4 trillion out of the market in the next handful of years. So if they do that and they're pulling money, what's that going to do to real estate? What's that going to do to commodities? And what's that going to do to the stock market? Now, we've already seen what happened with the stock market. So the bottom line is this, is that if we're looking at it right now, when it comes to what we do, like I'm a real estate wholesaler. So now there's going to be massive amounts of floods which I believe here over the next, year to 2 to 3 years of foreclosures coming into the market. Then we have this quantitative tightening where they're pulling money out of the market. It could get pretty ugly. Now, the interesting thing is, if we go back to the inventory right here, and if you look back in 2008, who buys during this time frame, right? Cash buyers, buy and hold investors typically exit the market, right? Around this time, right? As soon as the market starts to correct, like you're seeing, you might be a wholesaler and you might have a hard time finding cash buyers that want to offer your price on the property. You're having to go back and renegotiate. You know who's buying during this time frame right here? Retail buyers. So if you don't know as a real estate wholesaler on how to list your properties on the MLS, learn it quickly because that's who's going to be your buyer, is going to be a retail buyer. Now, once you hit this point right here and the Federal Reserve comes out and they said, hey, we're going to do quantitative easing, they pump money back in the market, they lower interest rates, then you'll see hedge funds coming out and they're going to start buying properties like crazy. And this is a really, really good time at this peak to start buying properties when they start their quantitative easing program once again. So the bottom line is that real estate market is shifting. We as real estate wholesalers, we have to understand what's going on. There's going to be a lot of distressed sellers in the marketplace. And the bottom line is we have to get the property at the right price to be able to sell our property at the right price. So I spoke to one of our Syndicate 9 mastermind members, and they have probably about 20 properties on the board. Their properties, and they're like, well, we're having problems selling them. What we do? I said, well, you got to list these properties so you have the ability to get eyeballs on the property, so you can get offers on the properties, so you can get a number on the property. So if you have to renegotiate, right, with the seller, so you can get those deals done. So if you're able and be flexible to make that happen, then you can do it. But the bottom line is this, is that we're getting a lot of foreclosures starting to hit. You got quantitative easing in the marketplace. It's now time to shift on what is going on as a real estate investor, and make sure, like during this time when the market's actually increasing in inventory, being a real estate wholesaler is the best method. I wouldn't fix and flip. I wouldn't buy and hold. I wouldn't do land acquisition and entitlement, stuff like that. But being a wholesaler is the right strategy to be in. So hope this helped. Giving you an update of what's going on. I'll see you in the next video. God bless.